Hey, everybody, I'm Dean Barber, founder and CEO of Barber Financial Group, broadcasting from my home office, the monthly economic update. We're going to cover a lot of great information today. I'm going to have Bud Casper join me. We're going to talk to you about how the bear market that we are in right now compares to bear markets of the past and what we think is coming down the road. All right, thanks for joining us here. Bud Casper, Dean Barber, and we're going to start off with a very ugly chart. Bud, what we're looking at here is the major indexes on a year-to-date basis. You can see that most of the indexes are off of their lows for the year by a pretty substantial margin. But it's really clear here, Bud, unless somebody had all of their equity positions just in the NASDAQ, they're pretty heavily negative on the year. Now, we have seen a nice bounce in the month of April, well off of the lows that we experienced in the latter part of March. So the question, Bud, is, where does this take us? Where are we from here? Because we've seen this bounce back, does this mean we're going to have a V-shaped recovery and things are going to be back to normal soon? What do you think?
Well, I'd love to see that, Dean. I mean, that would be our preferable conclusion to the issues that we're dealing with at this particular point in time. My emotional thoughts associated with it is that I just can't believe that it's over. I think there is a fairly decent probability that we're going to have a retest. It doesn't mean we have to go as low as we did, but the attempt kind of has to be there. I think there's a lot of unknowns that I'll refer to as collateral damage that has been caused by COVID-19 that we haven't seen in the numbers so far. But in the same token, I think what you're going to find is the one thing that we have in America that so many other countries don't, and that is we have an incredible resilience of surviving. And if that is the case, we have seen the market come back and retrace almost 50% of its losses, which is comforting from a strategic position of being okay with how you're invested, because the damage wasn't quite as bad as what we had it just 2 weeks ago. So with all this in the proper framework of asking the question, what happens from here? I think your point is well taken. It could be a U. And a U, of course, would mean we go down and we kind of move around in a range. I generally tell clients plus or minus 10% from the average of the lows over, let's say, a 3-week period of time. And then finally, we get enough confidence back into the economic numbers to suggest that the market should be at a higher multiple than what we have it right now.
All right, but I think you and I would both agree that it's going to be very difficult for any company to give any kind of guidance on their earnings until we have, at least something that's positive on the treatment, a more rapid testing program so that we can get people to get confidence to get back out into the public and start doing things. Because I know that a lot of people understand this, but there's some people that don't. And that is that consumer spending is the full 70% of our GDP. So the most critical thing that we can do is to get that consumer back out to doing the things that they were doing prior to COVID-19. We don't know how long that's going to take. We don't know what the damage is to the small business communities. I will say, Bud, that I think that what the federal government has done at this point and what the Federal Reserve has done at this point have been absolutely huge steps they've done. And I'm going to call it reacting with lightning speed. Compared to what they did back in 2008, it is indeed lightning speed. And I think that that's going to do a lot to help shape the recovery as we continue to tackle the reality of COVID-19.
Yes. That's an interesting point that you bring up, Dean, because 2008 in reality was the playbook that we used at this particular point. But boy, it had to be incredibly enhanced. And that's what we've experienced. You raised a point that is so true. And I wrote about this in a recent article that I did. And in it, we talk about the 70% factor, which is, of course, the 70% of GDP is based upon domestic consumption. But we have 26 million people out of work that are not going to be spending money because they don't have paychecks or they're on unemployment. And therefore, that has to have an impact on what's going to be happening economically, Dean.
And we don't know what it's going to be. So let's go back. I'm going to share my screen with you again here, Bud, and we'll switch gears a little bit. I want to go to a couple of charts here. First chart I want to go to is a chart that goes back and looks at past bear markets. We don't need to go all the way back into the 1800s, but we can come out of the World War I and influenza back here. And you can see that you had a period of time here that was absolutely huge, right? You had the drawdown, a little bit of recovery. People might have thought, okay, everything's better, and then boom, it hits again, and finally recovers some 13 years later or so. And then you had obviously here 1929, the great 1929 crash and the Great Depression. Then you had the post-war bear market, all kinds of things that were going on here. World War II. Let's go back to something that's more recent memory. All right. Let's go back into the lost decade. So we're looking right here, the lost decade. Right here is the dot-com bubble bursting. Mm-hmm. As you know, that was 2000, 2001, and 2002. Didn't recover until beginning of 2003. And then all of a sudden, 2008, we have the Great Recession. And so we did indeed have a lost decade. To put things in perspective today, this little red line, I know it's difficult to see on this chart, but that right now is the bear market that we're in, COVID-19. But I pray that we do not see something like this lost decade or something like what we had back here, Vietnam, Watergate, Black Monday. That's your V recovery, right? That's right. That is your classic V recovery. But there's another chart here. Now, before I go to the other chart, but what are your thoughts on this chart?
Yeah, well, let's look at the math associated with what you were talking about. So when you look at the first part of your lost decade, 2001 and 02, cumulative loss of the S&P 500 during that time frame was 47%. And then as it started to regain its losses, and then we step into 2008, and at that time, we had a 54, actually, I call it a 56, but a 54% decline at that point before we came back in to get this movement that we have had over the last 3 years, which has been unbelievably positive in all aspects of economic numbers. Unemployment was at a lowest it's been in, 60 years? Profits were up considerably. And then out of nowhere, COVID-19 comes into our lives, kicks it right in the teeth, knocks out all a lot of the return that we had been able to accumulate. And just as importantly, it took people out of work.
Right.
It's just unbelievable.
So here's the thing, and it is unbelievable. Let's take a look at one more chart here, Bud, and we'll try to wrap this up because we don't want to go too long. Here's the deal. Let's look at this in terms of timelines. And if you can come back here, the longest bear market from peak to trough, back to recovery, was the World War I and influenza. Next one out here, this orange line, that is your lost decade, right? But look at this. We're right here. Right here is our COVID-19.
On the far left. Okay.
On the far left, we haven't begun. If this is going to be a true bear market, and it's going to be something different than the 1987 market crash, Bud, which we have no way to predict. I guess the thing that I'm saying is, look, we need to be prepared for the fact that there is likely more volatility ahead. We are prepared to make tactical adjustments to the portfolios as necessary. But the most important thing that we want to encourage everybody that's in our client base to do is to be speaking with your advisors, which we've been talking to lots of you every single week through these virtual means, and understanding how we've got things structured and how, more importantly, how it impacts your portfolio. So, Bud, closing thoughts here?
Yeah, in the words of Arthur Fonzarelli, be cool. Understand the situation, realize that we prepare for things like this, and we will persevere.
Yo, I agree. Well, we appreciate you spending some time with us here for our monthly economic update. Bud and I always have a good time doing these things. Stay in touch with your advisor. Stay in touch with us. If you're not a client of Barber Financial Group, we'd love to help in any way that we can. For all of our viewers on YouTube, thanks for joining us. Make sure and give us a thumbs up, hit the bell icon, and subscribe.